The Monetary Policy Committee had discussions during 3rd, 4th and 5th December. It deliberated extensively on the current and evolving macroeconomic and financial conditions and the outlook. Based on its considered assessment, the MPC voted unanimously to keep the policy rate unchanged. It, however, decided to continue with the accommodative stance as long as it is necessary to revive growth while ensuring that inflation remains within the target. The forward guidance in itself indicates that there is space available for further monetary policy action. However, there is a need to optimize the impact of rate reductions. The key consideration has to be the timing of further actions, even as we monitor the impact of actions already taken so far. Real GDP growth for 1920 is revised downwards from 6.1% in the October policy to 5%, that is 4.9 to 5.5% in H2 and 5.9 to 6.3% for H1 of 2021. The slowdown in GDP growth was cushioned by a jump in government final consumption expenditure. Beyond Q2, there are several positive developments which could turn out to be green shoots, depending on how they evolve. Rabi sowing is catching up from the setback caused by delay in Kharif harvesting and unseasonal rainfall in October and early November. At this critical juncture, it is of paramount importance that monetary policy and fiscal policy continue to work in coordination to achieve the best results in the national endeavor to revive growth. Now I shall address the developmental and regulatory policy measures taken for strengthening regulation and supervision, broadening and deepening of financial markets, and improving the payment and settlement systems. On regulation and supervision, guidelines relating to urban cooperative banks on exposure norms for single and group borrowers, promotion of financial inclusion, priority sector lending, and the like would be amended with a view to reducing concentration risk and to further strengthen the role of UCBs in promoting financial inclusion. The Reserve Bank will facilitate the setting up of a self-regulatory body, SRB, as a first step towards the development of secondary market for corporate loans. Finally, in the area of payment and settlement, prepaid instruments, PPIs, have been playing an important role in promoting digital payments. To further facilitate PPI usage, it is proposed to introduce a new type of PPI which can be used only for purchase of goods and services up to a limit of rupees 10,000. The loading, reloading of such PPI will be only from a bank account, and they shall be used for making only digital payments.